Good morning. It's Tuesday, March 4th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's get you ready for the trading day. Let's look at precious metals, futures, commodity markets. So looking at the precious metals overnight, you do have gold futures surging up about $28. That's up about 1%. Trading at 29.2980. The low of the overnight session is going to be 28.9250. So we're just sitting on the high of that overnight session. Your pivot point today is going to be 28.9130. We don't want to see futures trade below that market as it could fuel a washout back down to the recent swing low. Silver futures up about 18 cents, returning to yesterday's high of the session, 32.49 and a half. The high in the overnight session, 32.56. The low is 32.06 and a half. So your pivot point on silver futures, 32.14 and a half. You don't want to see futures trade below that level. And the way that that could shape up in development is if you do have another continued washout in the equity markets. Also, you do have copper futures under just a bit of pressure, down about 1% at 455. There was an article that came out that said that Chinese copper output had risen to a record high, and I believe that's where you get that pressure there as some of the supply issues might be coming off, and you're seeing China work on its own internal copper rather than importing copper at the moment. You have aluminum futures slightly positive. Platinum futures at 970 here with a big boost yesterday. Palladium futures at 959 and the gold silver ratio sitting at 90-1. So we haven't really seen much action in that gold silver ratio when it gets up to 91, 92. That's been about the recent high here and the high for the year. And at that point, we start to see silver futures a bit stretched in comparison to the gold market. Conversely, when we see that gold silver ratio hit about 87, 86 to 1, we start to see silver futures really come off and gold futures get their boost. So really playing this range here on the gold silver ratio, and you can use that as some kind of trigger to evaluate whether one is stretched in one respect or another. Now I know a lot of old timers will say 65 to 1, 40 to 1 that the ratio is complete garbage at this level, but we got to trade the game that we're in, not the game that we want. So you start to look at some of these headlines and some of these developments. It's really gold rising here as that trade war is boosting that safe haven demand for assets. So gold really rose after President Donald Trump imposed those tariffs on Canada and Mexico, and he increased that charge on China, and it prompted some swift retaliatory tariffs back on us. So we saw Beijing announce duties on some American farm goods, and we saw other riskier assets really come off quite a bit here. So Goldman Sachs, they did predict and upgrade their year-end target on that gold market to about $3,300 an ounce by year-end. So we're seeing a lot of ETF flows coming into the market. So exchange-traded funds added 298,000 ounces of gold. That was in the last trading session here. It brings this year's net purchases to 2.95 million, and it's the fourth straight day of growth. Now ETFs also added about 457,000 ounces of silver in their holdings in that last trading session we saw yesterday, bringing this year's net total sales to 6.89 million. So let's look at a rundown here on some of these markets. So you do have US equities under just a little bit of pressure here. The NASDAQ as well. All these futures came off dramatically here yesterday, really with the NASDAQ breaking down quite a bit. 3% sell-off, huge sell-off in the market here, something a bit unprecedented. So it is the widening of this tariff war, that's sparking, I have to drink some of my $87 coffee. Coffee futures, you can't even find coffee when you go over to Europe. It's sold out off the shelves right now, so it's pretty crazy what's going on there. We do have coffee futures up 5.15 overnight, sitting at 391, so just off the high of the session. So looking at it, President Trump, he imposed a 25% tariff on most Canadian and Mexican imports, and he raised the charge on China to 20%. It affects about $1.5 trillion in annual imports, so those tariffs are expected to have significant economic impacts here in increasing household costs with slower economic growth, and it could lead to some further retaliatory measures by other countries. So if you look at the agricultural impact, because that's a new development here, so Canada and China, they retaliated with their own impact or their own tariffs here, with Canada imposing levies of about $107 billion worth of U.S. goods, and also tariffs up to 15% on American agricultural shipments. So China, they imposed their own various farm product tariffs, including soybeans, corn, and cotton. So you look overnight here, you got beans dropping below $10. You have corn down 5 cents. And finally, you have cotton, excuse me, down 185 at 63.66. So the agricultural markets really selling off on this particular news. You look at the cryptocurrencies, we do have it returning to the scene of the crime, back down at about 85,001, ran in the resistance point at about 94,000. A lot of people taking off cryptocurrencies on that rally here yesterday, looking at that as a gift as far as that rally is concerned. Now futures coming back down. Going to probably start looking again at some of those key levels of support. 82 down to 75,000 as your pocket support on Bitcoin before any kind of re-enter over here. You have the dollar index trading at its lowest level since December 10th, so they're really beating the dollar down quite a bit, and all your foreign currencies are rising quite a bit. And I believe that's why you're seeing this gold futures really take off to the upside. The euro currency tacking on another 70 points at 105.15, and they're almost coming back down to parity here between the two, between the euro and the dollar index. You have 10-year treasury yields slightly lower here at 4.16%. You got the 10-year note up over 111 right now, 111.19 last. So they're really starting to price in some of the rate cuts. There's a lot of talk about that GDP nowcast model coming out in Atlanta showing negative growth here, and recessionary type of trading environment is really what's happening as far as economically. You have crude oil futures below $70, trading at 67.44, down 93 cents. So this is a couple things. One, it's the tariffs. Two, it's the OPEC plus the output hike. And then three, you also have Putin agreeing to help Trump broker a nuclear deal with Iran. So whether or not that pans out, that's to say another side of the story here. But looking at these markets here, it's really critical that the U.S. equity markets don't continue to sell off, because that's where you could see this weighing in, this dragon on your precious metals markets. So just be conscious of, these other outside market developments. A lot of people use their U.S. equity positions in order to fund their precious metals purchases. And then the other thing is, when you start to look at miners and things like that, remember, they are stocks, they are companies that are ran by, they've got labor, they've got energy costs, they've got to export products, they've got a number of different things here. So it's not necessarily the pure price play that you're looking for in the metals market if you specifically want to own gold or silver. And if you want to monetize it, I always believe that the futures are the best way to do it, and you can control the leverage by the size of the account and the number of contracts that you trade. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.